Okay, so there was an indication of a low due there. And this is a good one because if this was a low, Pap, then we had a left-hand translation already on the daily chart. And, you know, so we're in a sort of a negative cycle pattern on the daily at the moment. You know, I'm not saying this, I'm going to be thinking this out a little bit here, because did the low even stretch out? Bottom line, though, is that based on the prior cycle timing, this should have been a rising phase. We got some positive price action for a few days, and then we broke below it. Okay, so at the moment, we're still showing negative momentum, both reversal scout and slim ribbon, and we do not have pattern. The pattern structure from a minor perspective is negative, clearly negative, right? Because if you look at these swing highs and swing lows, here's a swing high, did not take out the prior peak. Its decline took out the prior minor near-term low. And if you just follow that pattern, you can see that the minor pattern right now is negative. The momentum is negative. So the combination of those two things suggests that the minor bias is negative. Now, if I look at a little bit bigger picture, Pep, you can see here that for me, I mean, this is a typical pullback. We're into the 50%, getting a little reaction out of it. 61.8 is down here. I don't want to see it close below 66.50. If we do that, then that's going to neutralize this really nice positive pattern that formed and can open up the door to just a lot of chop or new downside levels. So that's what I see on the daily chart here. To fix the pattern, we need a close above the 61.8. So I'll do a draw here for you, perhaps, so you can have those numbers. You could do it yourself if you have the charts. But that's about 70, let's call it 70, 90, or 71. So at 71, if we can close above it, that would be a very strong positive situation. You might say, well, Matt, that's, you know, looks like a long way away. Aren't we giving up a lot of opportunity? I would say it's not about opportunity. That's all how you look at opportunity. It's more about probability. And if you consider opportunities based on probabilities, then for me, once you get above 61.8 and you close above it, the probability of continuation becomes 60, 70, 80%. Right now, to be able to say, okay, we're on our way to new highs is about 50-50 or worse. So, and the reason I say it could be worse is because you have reversal scouts negative on the weekly, and you have reversal scout, slim ribbon negative on the daily. Even though these patterns are still positive, I don't take it for granted, and I have to see some other kind of positive price action to give me the confidence that this more dominant positive structures that are forming are continuing. Now, if I'm a longer term investor, you know, you could take that a little bit differently, and maybe you're adding ever so much as you hit these key supports because you're dollar cost averaging. But if you're a trader, you know, that's a different story. I'm going to just see what your outlook period again was, Pep. Short-term, intermediate. Well, I gave you short-term bias. Minor's cycle pattern is negative. The momentum is negative. You got to get a close back above 71. From an intermediate time frame perspective, let me look at RVs. So this was probably pointing to sometime in late June to even mid-July. Okay, so because of that, it's possible that the intermediate cycle is dragging out the short-term cycle. That's why it's really important to understand and track multiple time frames, because if I'm a short-term trader, I really want to make sure that I'm seeing an intermediate cycle give some price action that would suggest the lows in place, because if I'm a short-term trader and let's say there's 4 weeks left in the intermediate time frame cycle low, and I want to take a 2-week trade, I could get stuck here. You know, you get stuck here for a number of weeks as that intermediate low tries to form. So it's very possible that this intermediate low is trying to still form, and therefore this is another example of where RV and Katie might, if they were looking at this, they would adjust that cycle, the daily cycle, possibly because it's stretched out due to the intermediate cycle. So if we can see perhaps the reversal scout turn up, then that would add some confidence that we have a change going on and that we have a likely daily cycle lows in place, or at least a short-term lows in place, and the possibility that an intermediate low is forming or has formed. So if I want to be long XLU, that's the kind of price action I need to see. Once those lows form, then you can start doing some draws for yourself. Let's just use this current swing low here. And the magnitude of this prior move is very strong, and that would point to 74 to 75.80 as the upside targets. But I don't like to say that that's the case for short term, because Pap, what you want to do is really be realistic. So this move here took about it took over 30 days. Okay, so as a short-term trader, I'm looking at 1 to 3 weeks, not looking at 30 days. If I'm looking at 30 days, then I have to be an intermediate time frame trader, and I have to strategize around that. So if I'm a short-term trader, I'm going to be dealing with some decent resistance here, and I have to be mindful of that. So if I'm a short-term 1 to 3 week trader, I have to be aware that 69.65 at this time to 70.25 is probably going to bring out some sellers. And even if I close above that 70.91, there's a chance I pull back and I chop around. Really, at the end of the day, you want to give yourself enough time. And with a symbol like XLU, you could try to catch a low, but if you're catching the low, look at this, right? You have this rally and it goes sideways. Let's count these number of days, because you could get excited, right? We get this bounce, and then essentially it went sideways for almost 21 days. So it's really important as a short-term trader that you have a good sense of where you are, and that you are not cutting yourself short in terms of opportunity. This short-term PAP is different because you had a breakout. So now when you have this breakout, you can get these accelerations that occur, these impulse moves. Right now we have to fight resistance again. So 38.2 to 61.8, I have to watch for resistance in the short term. Intermediate, I can look for these higher levels, but again, that's if this low holds. If this low doesn't hold, then there's risk that if that low doesn't hold, then we have risk of a new lower lower, which could come down to maybe 67.50, or it might get down to the 78.6 fib extension, which is near that 61.8. And I would think there'd be very strong buying interest if we got into those levels, if we don't set a low here, which looks like it's trying to form. If not, then again, I'm looking at this zone here as where a short-term low could form, or even the intermediate low. And based on the intermediate pattern, there's a higher probability of a new upside move in that intermediate time frame that would get us back up to the 61.8 to 78.6. If we get a close above that 61.8, that's going to open up the door to new highs.